Good afternoon, everybody. Welcome to your Monday edition of the TraderMerlin Show. An exciting one out there. I did not see this day coming. Did not think it was going to be like this at all. And I was pretty happy about the way that it transpired. I've got a lot of trade updates to tell you about. I also opened up a few new positions today. So let's get rolling. Tom says, we getting political? I am more of a political guy than a policy guy. No, we're not getting political. No, I'm not going to go in politics, really. This isn't pointing a finger at any one party. But as you can tell by the graphic today, I used to love playing this game as a kid where you'd have a can in the middle of a parking lot or in the neighborhood or something. You have to kick it, and everybody's chasing each other. It sounds really stupid. It's a good bonding experience. However, a little bit different bonding experience when it comes to what's going on with our elected officials. So essentially what happened in the wee hours of the evening on Saturday, there was an announcement made that they had come to an agreement, and they really didn't come to an agreement. This was not a resolution. There is no settlement. It's a stopgap, which basically says, okay, we'll keep doing what we're doing for another 45 days. So basically the can just got kicked further down the road, and this is something we see happen over and over and over again, regardless of which party is in office. Again, it goes back to the total dysfunction of our government. So before, Big Eb, do you know me that well? You do know me that well? Yes, I did. I actually opened up 20. I sold 20 puts on XLU today. I'll tell you about that trade in a minute. Yeah, it was a good one. I'm good for that one. Let's dive into a listener comment, though. So, obviously, no matter what I try to do that's good, there's always going to be some haters out there. And I think I have a hater, which I'm going to expose a little bit just because it came back and bit you in the face. So, I get emails all the time from people. Most of them are good, supportive, want ideas. Let's talk about this topic, which is great. I'm always about improving. Well, I got this one on Sunday morning. And let me read this one. Let me make sure I took his email off. Okay. So here's from Bruce Timmons. This was sent through TraderMerlin's YouTube website. You can actually send emails directly there. It says, uh-oh, no government shutdown. Looks like your short traders are going to get killed. Ha, 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 ha. Laughing at me. So I don't know whether you just are hoping that my trades go south on me, Bruce, or you're just being a jerk, or hell, maybe it's even Sam just trying to throw a little shade at me. The laugh is on you, actually. I think it was actually kind of funny if you think about what happened. So unfortunately for Bruce, when he looked at the futures market when they opened up Sunday or Sunday afternoon, I got this one later, he probably was looking at the futures market, which had gapped up and was showing, 0.6, 0.7% gains for most of the major market indexes. And then we actually opened up for trading. So let me go and look at the Russell 2000, which definitely had a nice bounce back. But here's your daily of the Russell. So just so you know, I took out half of my trade, right? I am 50% out of that short trade I took on the Russell. Primary reason was, you guys can see I've got a bunch of different red lines on here. And the ones that were significant to me were right here. This little red dotted line at the bottom said if we get to that level, right, 1771. I still don't understand why my chart has this really weird date on the right-hand side. Something must be all messed up here. I'm not sure what that is. But it was right at 1772. So when it came down there, that was my first target. So I was thinking, I told you guys, if it rips through it with real fast moves, then I'll keep it open and just trail stop the thing. So right now, it came down to 1772, stalled. Actually, 1770 is the number I have on that red line. Yeah, 1770. I closed half the position. I'm still holding 40 puts short, directional, so I'm long 40 puts, which I may close out tomorrow. We'll see how it goes. I'm not that confident right now because of some of the economic data that's coming out, and I was really hoping for more of a delay. I was really hoping for a government shutdown. Give me a week of government shutdown. Markets will drop a little bit, allow me to get out of my short position. But closed off of half of it. I still have the second half. So what's funny, if we look at this on, let's say, an hourly time frame, you guys can see right here is where we opened up on Sunday. So it gapped up. And at that point, Ben was probably looking at this or just laughing. Maybe you're anticipating because I thought I got it early in the morning. We were up 0.85% when the markets opened on Sunday night. We actually rallied up to about 1% up. And I thought we'd probably continue on up, right? We got this out of the way at least for another 45 days, which is convenient because we kicked this scan down the road and all of a sudden it's going to be November 15th. So right near the tail end of the year, we're going to start to go through another one of these ones. So I'm looking forward to it. It's the date put on your calendar. As you get near the mid-November, you'll start to have more talk about this and more issues. And my guess is they'll probably kick it down the road yet again. But at least it creates some volatility when we get moves like we did today. So to Ben's dismay, when we opened up this morning, we opened up actually down and then just proceeded to continue selling off. So Ben, I'm putting you on blast right now because first off, why the hate? Why are you laughing that my position might have gone against me? A little support, some team effort here, Ben. Or Bruce, whatever the heck your name is. All right. Thanks, Big Eb. I did well with half the trade, right? I still have the other half to close out. So we'll hopefully get to the target I wanted, which I don't think we will. Remember, that target that I was anticipating is much lower. That is the bottom of this yellow box, which I just don't think we're going to get there. We did break down below that 1770 mark today, which I liked, but all in all, I don't feel that comfortable or confident that we're going to get down to that bottom of that yellow box. Just doesn't feel like we have that momentum right now in the market. So that's why I took off half, and if it does drift low over the next week. But remember, I have an ultimate deadline on this trade, which is October 20th. I'm not allowed to hold this position any longer than October 20th because that gives me 30 days to expiration, and I don't like to hold trades that close to expiration. Just a rule of thumb for me. Everybody's different, so those are my rules. And, one of the rules was I'll take half off when it gets to my target. We got there. Happy that one worked out for me. So thank you, Bruce, for your pessimistic words. Continue sending those pessimistic words. Maybe it'll just continue to surprise you and go the opposite direction of what you think. So thanks, Bruce. All right. A couple of little comments that came in. Anthem on YouTube page posted this one, and I tend to agree. He says, I think ultimately the market understands that the prospects of a government shutdown is just government posturing. The markets are made up of people far smarter than the politicians. Boy, howdy. I think everyone understands that all the posturing of unpaid government workers is an empty threat. All payments will get fulfilled, even if retroactively nobody will not get paid in government. Correct. And, the sad part is that those elected officials will get paid. It's other government employees that will, for a while, not get paid based off the inability of those elected officials to come to an agreement. It's just crazy. Everybody who's voting on these measures, if the government shuts down, they should lose their money too. As a matter of fact, not only should they not get paid, I think that they should be penalized for not coming up with an agreement by October 1st, right? If that deadline was October 1st, you hit that deadline or you don't. One of the things years ago when I was working construction is there were people putting clauses into construction contracts that said the house is supposed to be done, or this project, let's say remodeling my kitchen. I want to remodel the kitchen completely done in 90 days. Every day after that 90 days, you're now paying me a penalty, right? That would be great if our government officials had that type of thing, but unfortunately they do not. Someone is hoping you're in a bad trade. Yeah, Lisa, someone was laughing and because when the kick the can down the road government thing on Saturday, which basically said, we'll move it 45 days further before we shut down our government. We'll just do a stopgap. Somebody was happy, apparently, my short trade was going to get smoked, and actually it did even better today. At one point, we're down almost 2% on the Russell. I was loving that. Time for a petition for that. Good luck, because they would have to vote for it. They'd have to sign it. Never going to happen. All right, let's start. I'll go through our top 8 here. Crude oil continuing 3 really aggressive days of sell-off, or 3 continuous days of sell-off. Again, I have this 83.38 line on your screen, which is the level I've been looking for it to come back and test. We haven't done it yet, so that is. I didn't think we maybe would pull back this quickly, but here we are running right towards it, going to that crude oil level at 87.38. So keep your eye on that one. Right now we're at 88.82, so you still got $1.50 left to fall, but we dropped $1.92 today, so that shouldn't be too hard of a challenge to get there. That was your worst performer. Russell 2000 was your second one. We've already looked at this one quite a bit. One of the reasons I have this red line drawn on your screen was it's the origin of this last really big rally out, which goes to the 2nd of June of this year. So that's kind of why I was targeting that one. For those of you who know core strategy and Online Trading Academy supply and demand, you can figure out the rest of the reasons why that was the targeted spot. Now, it's not the best demand zone in the world, but it was one of the few that I saw that had substance for me after it was breaking this neckline of this head and shoulders pattern. So there we go. Liquidated damages is called for late completion. Well, all right, cool. I would love if we had liquidated damages for our elected officials. Every day we don't get this done because right now they don't care. They're not even thinking about it, right? They've successfully kicked this down the road. I don't know if you saw the video, but they're all standing around, clapping at each other and knuckle knocking and high fiving. It's like, you incompetent SOBs, unbelievable. And it just makes sense. We should all just try to become an elected official. Just get into politics. You'll get your health insurance paid forever. If you get high enough, you get Secret Service protection forever. Crazy. Ridiculous. These guys get all the stuff that they want. Okay, that was your number 7. Number 6, and we'll talk a bit more about this at length as we do on today's show. Now, 1.01% for gold, and a lot of people going, uh-oh, what's happening? As you know, I have a pretty large position in silver, so I'm getting smoked over the past couple weeks, but I'm really not concerned at all. One question that did come through was this one here. What in the world is going on with gold for John? I actually created an AI graphic for that one, which was looking like this. I don't exactly know why it came up with this graphic or why the guy has 2 sets of glasses on, but there is a guy panicking over gold and silver. I called it Metals Meltdown. So we'll do a little bit of a detour right now and not just focus on gold, which is now 1.01%. But what's really interesting about how far gold has fallen is from its peak that we saw back on September 20th, gold is down a pretty shocking 6.41%. That is pretty significant drop in the price of gold over just the past 2 weeks. Now, as we zoom out here, we got to look at it from this perspective. It's like, well, where do I think it's going? Well, we've had this line drawn. There was a double bottom that happened back in February and March of this year, and that's right around 1820. Well, we fell almost 19 points today. We're about 27 points away from that demand zone, so that would become the next logical target. Now, gold, even though it's fallen this much, isn't the worst one there. SLV, right? Silver's decline in just 2 trading sessions is like, wow. From peak to trough, silver's 9.4% in the last 2 trading sessions. Down. Crazy big move there. And I'll explain why. Skilled Stock says gold won't stop dropping. We shall see. Merlin, did you purchase any gold at Costco? I did not. I actually, it's funny you say that, Oliver. Everyone's making a huge deal out of the fact that Costco is selling gold. I forget which one, but it was actually a gold bar or an ingot that I don't recognize. I don't recognize that one. I'm used to the Philharmonics or the Cougarans, Maple Leafs, the different styles there, but it was the one I didn't recognize. So I actually did not buy gold, but I did sell some more puts on silver today. I sold the 19 strikes, got some real good premium for October 20th. I'm fine holding it longer term. But silver really getting butchered. We'll look at why in just a second. And while I'm explaining this and looking at some of the different metals, you guys tell me, why do you think that silver and gold and metals overall are just getting clobbered in the last couple weeks? Why do you think that is? So there's your silver. Here's palladium. Palladium, for the most part, has been rather sideways for the better part of, 4 or 5 months. It's really the last 2 days, kind of like silver, where it's had a pretty significant decline, but nowhere near the numbers we saw with these other ones. 7.5%, I guess that is somewhat near. 7.5% slide for palladium futures in the last 2 trading sessions. Here you have platinum, which also had a pretty significant swing. Platinum looking the worst of those that I just mentioned, platinum and palladium. Why? Because you're sitting down here near the bottom. Right, you're sitting right near this area that it has not been able to break for quite some time. After you break this, you do have some stopping points right around 850, and I would say probably around this 800 mark as well. Bond yields in the U.S. dollar killing metals. Yep, exactly. That's it. Bond yields surging. U.S. dollar is one of the major pieces, and also, the data that came out today. I don't know if anybody watched the ISM manufacturing prices numbers came out today. So what that means is, from a manufacturer's perspective, if the cost of your prices of your inputs are going down significantly, that means inflation is probably more in control. That means you may be able to cut the cost of your goods and services based off of your inputs declining. Now, I think personally, a lot of companies are going to keep their prices right where they're at, right, and just have better profit margins. Not to sound overly greedy, but if I was running a business right now and I knew that 2 years ago I was selling, let's say, 100 products a day, and today I'm selling 100 products a day, but I've jumped my price up 50%, I'm going to keep selling my products at the same price. There's no reason for me to lower it because I'm still selling as many, but I'm making a lot more money. My bottom line is just going to get better, especially if my costs start to drop. So let me show you that chart. here real quick. Here is the ISM manufacturing prices data. Notice they're expecting to actually start to go up a little bit from 48.4 to 48.9, dropped to 43.8. And over the past, I would say about a year, we've had consistently below 50. Below 50 on the ISM manufacturing prices means that the cost of prices are declining. So that's a year of declining prices for manufacturers. That's a great sign from an inflation perspective. And if you look at what historically people would look at gold and silver for, metals really, tangible commodities, was a safe haven. So when markets go through a period of inflation or uncertainty or just bad times, a lot of people run to gold and silver. Typically, gold is the main one they run to. But when inflation is under control, that theory that this is that flight to safety by buying gold, it's no longer really valid. So I think that's part of it. So you've got the inflation discussion saying, if inflation seems to be under control, therefore people don't need to run to that historical safe haven of gold. The second one would be the U.S. dollar. So let me keep running up our list here. I don't think we've gotten to the dollar quite yet. I forgot where I left off at. We were at gold. Here's the dollar. I'll just jump the gun. Dollar was up 0.79% today. It hit the number I was looking for. All right, so we didn't get it on last Wednesday, but we got it today. Right? We hit Monday. We hit 107 today. The high for the dollar index was 107.03. So we've hit my next logical target. Once that's broken, your next stop is going to be 108. And after that, you're looking at like 110.5. So there's some pretty big jumps here going forward. So the higher this goes, the more expensive gold gets. Remember, gold is around the world is priced in dollars. We talked about it being the world reserve currency. Granted, some places are selling gold in their native currency, but for the most part, it's denominated in US dollars. So as the dollar goes higher and higher and higher, the cost of gold is getting more expensive for other countries. And when you look at the currency conversions, I saw Skilled Stocksman saying great downtrend in the Australian dollar. Hey, it was a great downtrend in every currency today. Here, let's just do an intraday chart. Let's do 15 minutes. I mean, look at this downtrend. This is such a gorgeous down move in the Australian dollar, but it's just not just the Aussie. The euro is getting butchered today. The British pound taking it on the chin. Let's not talk about the ruble. Who cares about the ruble? But the Aussie, the euro, the pound, I mean, those are all looking pretty weak. The USD JPY is the opposite. But still, great trends today in the Forex markets. Pretty good for anybody who's trading that FX. So hopefully you took care of some of those trends there, Skilled Stocksman, and made some money on that one. So back to our daily. So if this keeps rising, which for all intents and purposes, I do see this dollar index continuing to rise. I don't see any real reason why I was going to stop. We had this great hammer formation we talked about on Friday's show, expecting there to be a move up. Didn't expect to be this strong, right? 0.79%. Doesn't seem like a lot, but for a currency, it absolutely is, especially the US dollar against a basket. And then the last piece here was your 10-year. And you notice that we surged above 4.68 right now. Today we actually broke 4.7% on the 10-year. That was the first time we've done that, going all the way back into, I got to go back decades. Well, not decades, a decade maybe. I think it's like, there we go, not a decade. Last time we broke that level was back in 2007. Once we break this one, again, I think we're off to the races to get to that 5.25 mark, which puts us back to a high from June of 2007. We'll see if that comes to fruition. But yeah, these are all putting pressures on metals. The other part here is there's a lot of talk about industrial production slowing down in the United States. Of course, I believe 58% of the consumption of silver is used for industrial projects. So it's an industrial metal, not like gold. Gold's more of a collector's one and jewelry and things like that. Silver is much more utilized in, I'll say, infrastructure, etc. So that is another reason why silver is getting crushed. Now, what about it? Well, let's go to SLV. Just because I did sell puts today, you can see you got this red line right here. Let me just go here and make this 19 even. So I sold another 30 today, expiring on the 20th. So definitely got a few days to go. We got a couple weeks to get there, but I'm not that concerned about it. I think at 19, I'm feeling fairly comfortable with that. So I did another 30 put contracts, which is 3,000 shares of SLV at 19, expiring October 20th. I don't, do I have it here? Yes, collected 27 cents. So that's That's pretty good. That's 1.5% for the next 3 weeks on SLV at a price, as you can see, was right where it ripped out of last time. So I am expecting it to stall here right at 19, but the bigger macro trends, of course, is going to trump any supply and demand zone. So we'll keep our eyes on this one, but just letting you know trades that I entered in this in my TraderMerlin account, which I am transparent with you. Let's see, what was the other one that happened? Oh, someone asked me could I update you on Target. Look, Target got butchered pretty badly today too, right? Down to 3.5%, but my strike is 105. I'm not concerned. I'm not worried. I know Tom's going to say I told you so, but let's wait until the trade is done. That's October 20th is when I have till 105 being that strike price. So I'm not concerned with that one. The other trade that I did make today, actually, let me finish these top 8, and then I'll go into the trade I made today. Let's see. So NASDAQ. 0.8%. I still have those 2 lines drawn on that. This is a weekly, so let me slice this down into a daily time frame, which is my preferred method to start. All in all, NASDAQ looked pretty good today. Up 0.8. You had the S&P was down. You had the Russell was down. I mean, all in all, there was a lot of pain, particularly with the Russell, which I liked even more. But NASDAQ was the bullish one today, up 0.8%. Technically, I don't see anything here that makes it look attractive from a trade perspective, at least setting up for anything, but nice to see that it bounced off of that 14,609 level we've had mapped out. And then we looked at the 10-year, and now here's Bitcoin. So Bitcoin over the weekend had a real surge. They're calling it Uptober. So the crypto world, if you hear the term Uptober, it has to deal with the belief that this month is going to be a very strong bullish month for crypto. But let's be honest, anybody who owns crypto you don't usually see them being bearish on it. I'm one of the rare ones, I think, that will say I'm bearish on crypto at certain points just because the trend is there or there's macroeconomic factors or regulatory pressures which could push cryptocurrencies down. As far as Uptober, meaning should we see a big up month? Personally, I do think you actually will get it. I'm joining the herd. Main reason is I do think that the pressure is mounting on regulators to go after the SEC to approve a spot Bitcoin ETF, and the fact that the SEC has reached out to 4 of the applicants to get more information on the back end kind of infrastructure on how they're going to do it, that's a very positive sign. Plus, I think the SEC right now needs to get this monkey off their back because it's just like all politicians' spotlights are on them for stalling and not making this happen. I think you'll probably see it happen this month, which would be very, very good. So there you go. That's our top 8. Let's see. Talking Monkey said, did you hear Japan will be stress testing banks for Silicon Valley style mayhem? Oh, no, I did not hear that. I heard they're buying a record amount of their own bonds, which just seems strange to me. I'd be buying U.S. bonds. I'd be selling my bonds at 0.1% or negative 0.1% or 0, and then buying the U.S. bonds and making 5.5% risk-free is what I'd be doing. Let's see. GEO did well today. GEO, the move up. Do I need a new keyboard? Did I mess up with something? Let's see. Q4, y'all. Trade safe, trade smart. Greg Kurtz. Yeah, I'm sticking to my January 1st prediction, right? My January 1st prediction was we're going to have an up Q1, a sideways Q2, a down Q3, and Q4. I was wrong. I was right on up Q1. I was not right on up sideways Q2. It was strongly up, but now we're seeing Q3 down, and I think that could spread into Q4. But I'm not that confident in it, which is why I'm kind of backing out of my Russell trade a little bit. I just don't have that much exposure, and why look to give horse in the mouth after Russell drops so much so quick? I can't be overly greedy there on that trade. I had a breakout trade in the N key right at the open, worked beautifully. Nice, good for you. It's got to be tough because I was kind of going counter trend, right? Most of the stuff was tanking, yet the NASDAQ was doing pretty good. Airsoft said that's so true, though. You're one of the only crypto person I've ever heard. Thanks, Airsoft. It's one thing. It's actually something I've learned. Oh, I guess you guys got ads right now. It just told me the ads were inserted. Sorry. I think that's something we should all take to heart, which is if you're trading, I don't care whether it's crypto or stocks, futures, options, you have to have the flexibility and the truthfulness to look at any market situation and go, it's going down or it's going up. In my early days, I would say that's actually one of those things that kind of wrecked me a little bit, was I'd become so adamant that this is going to be X type of day, call it a bearish day. So I'd just be shorting the hell out of everything. And all of a sudden the markets would just rally and you just get smoked. Why? Because I thought my opinion was stronger than what the market was actually doing. No, you just got to look at the charts and let them tell you what to do. So, everyone here should have an opinion. Holiday Inn. All right, good. I'm glad it's Holiday Inn, not some trading school. I don't want to see other trading schools advertised here. It really bother me. All right, well, that's cool. I'm glad they paused the feed, but that means that now the delay might be even longer for you. So, cool. So we went through the metals, which obviously there's an issue there. The question is how deep will that pain go? And I can't tell you exactly where I think the bottom is. And I look at gold. I do have that level, right as I mentioned, 1820. You look at SLV. I'm thinking that $19 mark might be one. There's also another, they can go down around 1850 where I think we'd stall at. But I think it's just a little bit too much, too fast. I think all of a sudden that fear trade is coming in and it'll probably have a nice spike back to the upside here. So I'm not too worried about that one. So let's go into the trade that I took today, which Big Eb was right on, because Big Eb probably has looked at the way I set up my screen and kind of wondering, well, what is Merlin looking at? Well, I have right here a list of ETFs that I really strive to do my 1% strategy on, right? So I will come in on any given day, multiple times throughout the day, and I will click on this, and I'll just sort them by which one of these S&P sectors, technology, healthcare, financials, industrials, building materials, whatever, which one's getting hurt the most? Is there a real pain point? And notice utilities today. Utilities at one point was down over 5%. This is utilities. I even get a 3+% dividend on some of this stuff. So I actually was feeling pretty good about this one today. The question for me was, well, where do I think that this unbelievable sell-off in utilities is going to stall and maybe turn the other way? Well, utilities to begin with, in the last 11 trading sessions, so we're talking 3 weeks, is down 15%. That is pretty impressive. And I don't have a macroeconomic justification as to why that may happen. I am a believer that we are all going to continue to use utilities. I'm not cutting back on my electrical. I may cut back on my water bill here. I should just turn my front lawn into a desert since I live in a desert. But if I zoom out here and I look at these points back here, I'll explain to the podcasters here in just a second what I'm looking at. I'm going back into 2020. And coming off those session lows back in March, there were a couple little points where they made some bottoms and kept moving up. And one of those ones I'm looking at right now is this $54 mark. Let me just move a line down here just so you guys can see it on my screen. Okay, so there's $54 mark. Now, I don't think that this is a incredibly strong demand zone by any means, but I am okay selling puts with the intent of owning it at $54. So that's what I did today. And the numbers on this one, I did 20 of those, collected 58 cents at the $54 strike, so I'm making just over 1% for 3 weeks, right? It's actually less than 3 weeks. Those expire on the 20th of October. So I'm catching some falling knives today. I went and caught a falling knife on XLU. That's 2,000 shares worth if I could put that, so that's 100 grand. And I also have 30 SLVs at 19 today. When do you think it would be going higher? Depends on which one. Let's see. Let me quickly go back here. What is the best way of scanning for ETFs? Okay. Great question, Brandon. I guess it really depends on what you want to look for. So there are ETF scanners out there that you can go and run and create a watch list of the ones that you look for. So for example, I would apply the same basic filtering process that I would do for trading individual stocks. It's got to trade over 1.5 million. Hell, make it higher than that. You need liquidity, right? So, all right, 2 million. Make 2 million as your absolute cutoff. And then typically you're not going to find ETFs trading down below $15 anyway, but I would say put a $15 cutoff on that one. And if you're going to be actively trading these, then you'd obviously want something that has a high beta or ATR. But remember, the point of an ETF is to diversify your holdings and therefore reduce your risk. So that's what I would do to start. I wouldn't have like 3 of the same thing, right? So if you're trading, technologies, all right, you've got triple Qs, you've got XLK. I don't really need to throw any more in there. What I typically will do is as you can see on this list here, most of these are the S&Ps, the X, the spiders. So I've got the spiders financials, the spiders industrials, the spiders building materials. I have IYR, which is a little bit different. That's real estate. Spiders energy, spiders utility. So I'm kind of going with the big ones, right? With the bigger fun families here, but there might be other ones that you could find appealing. That's how I would approach it, Brandon, is I would just make a list, and I wouldn't go that extensive. You know, if you have specific segments, like let's say you want to get into the EV space or cannabis space, sure, there's different ETFs out there that will reflect that market segment and throw those onto your list. But ideally what you want to have is a quick list like this that you can sort, see what the winners and losers are for the day. You can click on them real quick and just kind of run through the list to see, do any of these, meet some technical patterns? Are they in supply or demand zones? Are they crossing over on moving averages? Are they overbought, oversold? Right now, you look at utilities, I don't think I would need to tell you, but if I were to throw on Bollinger Bands or Stochastics or RSI, it's screaming that this is oversold, right? Let me just do that. Let me take one of these things off here. I might take a couple things off. Let's take that one off. I'm going to take this moving average off. And let's go in here and add an indicator, and let's do Bollinger Bands. I know a lot of people like Bollinger Bands. Go to big B. Bollinger Bands. Add those in, and what do you think it's going to say? Oh, look at that. We are way over. So we are so far outside the lower Bollinger Band on the utilities right now. Crazy. So some of these other ones. How about building materials? Right? Building materials not outside the lower Bollinger Band. And that doesn't necessarily mean that that is your buy point, but it's one of those things that may help assist you in your trades going forward. So that's one of the tools I like to use, is just create a simple watch list. And in my brain, I don't need to add in Bollinger Bands. I don't need to do any of that type of stuff. So I've watched enough charts where I could literally pick anything. Let me turn these Bollinger Bands off real quick. Let's say, XLK. If I look at this, it's up 1% today, but you guys probably all know there's nowhere near the top of the upper Bollinger Band because it just hasn't had a big trend on it. If I go to, let's say like Bitcoin here, go to BTC, Bitcoin is actually, it pierced it, but now it's come back down. Let's see. Yeah, pierced it, but now it's actually still outside of its upper Bollinger Band. So all in all, it means that Bitcoin is now trending very strongly to the upside, but it got a little overdone with the XLU, the utilities that I sold puts on today. You're trending pretty strong to the downside, but when these flares on Bollinger Bands get extremely wide and get real big, that's typically when things come snapping back in. That's why I sold the 54 puts today on XLU. Let's see. Hey, thank you, Greg. Says, I'm new to TraderMerlin. Client, and your content has been awesome so far. Hey, thank you very much. Appreciate that. Welcome to the fold. Big short Bitcoin at 28,410. My target for now is 24, but I'm skeptical. So let's look at that one. Yeah, I'm not shorting Bitcoin right now. I tell you what, if you're shorting Bitcoin, you got to be real careful. And I'm not saying that because I'm long Bitcoin, which I am, and I will be long Bitcoin until 2025 November. You all know the reasons why. But if you're shorting Bitcoin right now, be extremely careful, Greg, because the Bitcoin ETF is going to get approved by the end of the year. I'd bet big money on it by the end of the year. So if you're caught short-handed when that announcement comes out, the day the SEC says we've approved BlackRock or Fidelity or Valkyrie, or you pick one. If that happens, you're going to see Bitcoin probably jump $10,000 in a period of an hour. It's going to just spike like crazy and could smoke you. So be real careful with that crypto space, going short at least. My bias is definitely to the long side on crypto. Be careful. Careful with that one. Let's see. Yes, what is the best way of scanning for ETF? So I kind of went through that. There's an ETF scanner. Forgot what the name of it was, but there used to be an ETF. I think it's either ETF database or ETF.com. So here is one. Let's see if it allows me to do it. Yeah, you might not be able to export. Right, it'd be kind of cool if you could export these lists, but you go out here and let's see if it allows me to do filters. No, this isn't as good. The other one I've used in the past was ETF.com. The best screener. I love it. Everybody claims that they're the best. I'm the best screener out there. All right, ETF. We got that one. Probably have to sign in to get more detail. What's going on here? Classification, features, performance, trading data, issuers. It would take some time. Let me find one, and I can probably just do a little bit better because for me, average daily volume and share volume is going to be pretty important, so we can set those criteria. But if you can't export this list, it's not good. If you can't export this list, you'd have to retype in all of these. But again, you don't need to have 100 different ETFs. Right now, it says here there's 326 on the scanner. You don't need that many. really to find good trading opportunities, you get 10 and you've covered the entire market. You could do the broad market ETFs like SPY, Triple Qs, IWM, diamonds. And then you go into the individual segments. All right, I've got my utilities, my healthcare, my building materials, consumer staples, discretionary. You have all those different market fragments, then you're good. Unless you want to go specialty. Like I said, go EV or blockchain technology or cannabis or, there's all types of little niche ETF segments. Other than that, I think with 15, you could cover every market segment pretty carefully. Let's see, why a Bitcoin ETF? Why not just buy it? Because a lot of people are afraid to buy it, Sly Dog. If most people are not comfortable going to somebody like a Coinbase, a Kraken, Binance, Gemini, and opening an account, going through all the KYC, AML, just to buy Bitcoin. It's foreign. It's a new thing. So a lot of people are skeptical and don't want to take that step, but they'd be happy to buy something that's through their Charles Schwab already, through their E-Trade, through their, those established financial firms. So if all of a sudden an ETF showed up that was a spot Bitcoin ETF, which meant you actually were owning a piece of some Bitcoin there, then I think more people would buy into it. Not only that, but the fund itself. So if BlackRock gets approved, they have to physically hold those Bitcoin. That's the whole point of this. So if all of a sudden it takes off and everyone's buying the BlackRock ETF, great, because BlackRock now has to go and find Bitcoin, which, as you know, is extremely scarce. There's only, I think we just crossed the 20 million mark. There's only 20 million of them out there, and a majority of those are not sitting on an exchange. So they have to go find these Bitcoins somewhere. Which means the price is most likely going to surge more and more and more and more. No, OTA is not using TradeStation again. Nope. My hands are rubbing like Birdman when the SEC announcement happens at Bitcoin and Bank. Yeah, me too, Oliver. Man, I tell you, my portfolio I've got a decent sized portfolio in crypto, but when that happens, that'll be probably the biggest event for crypto for the year. It's just a watershed moment because now we've got that regulatory BS behind us. And I think it's pretty clear that it's going to happen. We just had the approval for a Ethereum futures ETF, which just happened. I think it actually started trading today. I can't remember the ticker symbol off the top of my head. My log scale halving cycle chart still agrees with you on BTC USD. What, that it's going to be going up? Let's see what else we have here. Tom Bar says a BTC ETF would work. Yeah, an IRA yeah, exactly. And it's going to be easier for people to have access to cryptos in retirement accounts, etc. You might actually start to see Bitcoin mutual funds. So, for example, if you have a 401k plan right now, your employer most likely does not give you ETF choices because there's not enough margin in there. The mutual fund families make all the money. So whoever's providing your 401k to your employer will most likely give you nothing but mutual funds. And at some point, we'll probably have a Bitcoin or a cryptocurrency mutual fund that you could buy into. But this opens the door to that. That's down the road. Maybe BlackRock secretly rubs shoulders. Could be, Greg. Well, there's all kinds of speculation on who Satoshi Nakamoto is. But I'll tell you one thing, and I'll bet my life on it. It's not Craig Wright. I mean, you want to talk about a charlatan. You want to talk about a scammer. Craig Wright. That guy, wow, unbelievable that the courts are actually letting him win some cases too. It's just mind-boggling. All right, what else did I have for today? Let me get. I'm gonna actually wrap up here soon. So let me go on your economic calendar for mañana. I did not listen to Jerome Powell's speech today. I know I could have. So I know that Skilled Stocksman here is trading the Aussie dollar. Be careful. You know that tonight they're coming out with a rate announcement. That's going to happen at 8:30, I think. It should happen tonight. I'm pretty sure it's not. Let me refresh my calendar here just so I can make sure. Yeah, it's going to be at 8:30 tonight. They're expected to stay at 4.1%. Here is your calendar. I just wanted to throw that one out there because you can expect there's some moves in that Aussie dollar, even though it's been looking pretty ugly right now. Any rate statement from their president could make big changes here in that currency pair. Tuesday, what do we got? Tuesday, October 3rd, you've got JOLTS job openings, the first piece of real jobs data. We've got a piece of employment data coming out every single day this week, except Monday. So Tuesday, Wednesday, Thursday, Friday, we've got in numbers coming out, and the unemployment number actually coming out Friday. You got ADP non-farm employment change on Wednesday. Tuesday is JOLTS job openings, and you have initial claims on Thursday. So some big stuff happening there. But JOLTS job openings, not the biggest, but it looks like they're expecting a small contraction in the amount of jobs, but 8.81 million job openings, plenty of jobs for people out there. That's pretty much it for the U.S. markets for tomorrow. Nothing really that exciting on the earnings front, although I will mention one. I believe it was McCormick. I'm going off the top of my head. I think McCormick. Yeah, McCormick and Company is the only one really that's reporting in the U.S. tomorrow. You've got Cal-Maine Foods, but they're a $2 million market cap. Probably not that big of not that important. All right. Can you magically create a forged Bitcoin? No, you cannot. It actually happened back in 2010 where there was a flawed piece of the code, and this gets really techie, but there was a bizarre situation where they made millions of new Bitcoin out of thin air. They did what's called a hard fork. And a hard fork is basically where they split the Bitcoin blockchain into two, and then they rewound it and said, this one over here, no one used it, it's dead. That was all fake garbage. This new one goes here, it has new code that prevented that from happening. So you cannot magically create Bitcoin out of thin air, which is why I am so bullish on it. If you ultimately have something that only has 21 million that will ever exist, right? 21 million full Bitcoin will exist. And the truth of the matter is there's people that are losing their Bitcoin every day. Not because of governments or agencies like that. It's because they lose their private keys, they have it on a hard drive, they spill something on it, and the hard drive fries, and it's gone forever. So you're losing, in my opinion, more Bitcoin than are being created, which makes it deflationary in nature. You have supply actually declining in Bitcoin. Any increase in demand, which a Bitcoin ETF would undoubtedly create demand for Bitcoin, you start to get these big supply and demand imbalances, which means big potential up moves for Bitcoin. And does that mean that all cryptos are going to follow suit? No. I wrote an article for Bar Chart last week. I think I posted that one to you on Shiba. Did I post that? Did I post it in the chart, guy, in the chat? My article, my latest one. Let me see. I think I did. It was on Shiba Inu, but I did a little bit of research on that one, which I think some of you might know or might enjoy. I know that most of you know my stance on Shiba Inu and what a joke that thing is. But my article was what's the probability of Shiba Inu getting to $1. But some of you might actually like this one because I talk about ETS won't spill coffee on your... That's good. Yeah, they won't. But see, there's the latest article. It's about Shiba Inu, and for those of you who are kind of into crypto, I do kind of outline kind of 4 key things I'm looking for with all project, which is going to be what's the purpose or utility of that coin or token, what's the utility of the community, and what's the tokenomics. Right? Those are kind of 4 important things to pay attention to if you're jumping into crypto, and then I ultimately get into my thoughts on Shiba Inu, which most of you know. Let's see. I think I saw it on X. Yeah, I think I posted on X. Good luck cracking SHA-2 just 10 times in. Even with these quantum computers, they're not doing it yet. But here's the real deal, and I think this is an argument that you're probably going to hear Big Eb and others that we're going to have quantum computers soon, which we already have them, but they're just not. They're not scalable enough to actually crack SHA-256 with any sort of regularity or certainty. But if we do get quantum computers or whatever the next level of computing power is, there is a distinct possibility that they could crack SHA-256. So what do you think would happen? We would just change the hashing mechanism from SHA-256 to SHA-512 or SHA-1028, right? And they'll just keep upping it to stay in front of that computing power. That's pretty much it. Dom says ETFs won't spill coffee on your Bitcoin ETF. Here's what I'm worried about, and I think that this is actually what the SEC is hung up on. And I have to side with the SEC here. If I'm going to approve BlackRock for a Bitcoin ETF, and you are now going to be holding these Bitcoin ETF or Bitcoin that's required, where are you going to keep that? Because there is a very slim possibility that BlackRock could lose their private keys, could lose the address, could lose the wallet. They could get hacked, and all of that Bitcoin could magically disappear. Of course, it'd be tracked to some extent, but I think that's probably the SEC's big concern is, okay, you're going to be holding Bitcoin, but we need to know how that's going to be done because we're hearing so much about theft and fraud and deception. And what happens if one employee just takes this private key and leaves and moves all that Bitcoin to a different address and disappears? Well, governments around the world would freeze or blacklist that address, so you wouldn't be able to do business with it. But yeah, that's the big concern, and I'm okay with the SEC getting more data on that, just so they know how safe and secure it is. Because as Tom says, spilling my coffee could ruin my piece of paper with my seed phrase on it. Yeah, that could happen. But when you look at buying a Bitcoin ETF and they hold the Bitcoin, now I have to trust them, right? I have two choices here. I could trust myself, or I could trust BlackRock. I'd much rather trust myself. I just know how the system works. I don't trust any financial firms. How do you invest in Bitcoin or ETF or companies? I don't invest in Bitcoin ETFs. So you look out here, and there's one that Margaret just mentioned, which was BITO. BITO going to go up. Yes. BITO will go up because the price of Bitcoin is going to go up, right? I say will. It may not be that definitive. If we get an approval for a spot Bitcoin ETF, then BITO will go up in value. I'm hoping that when we finally get a spot Bitcoin ETF, it will track the exact price of Bitcoin, right? So Bitcoin right now is at 27,558. Well, this is what you're looking at on my screen right now is the BITO Bitcoin Share Strategy ETF trading at $14.27. Well, what the heck is that? What does that mean to me? Right? I don't know. Bitcoin in the last 24 hours is down 1.6%, yet BITO is up 3.3%. This is not Bitcoin. This is something, who knows what this is. That's why I don't touch BITO or BitF, these different futures ETFs for crypto. I'm just not a fan of. I want them to actually hold it. So this will go up because it holds Bitcoin futures. And if Bitcoin does get approved for a spot ETF, the price of Bitcoin will surge. Therefore, this one will surge. But what's going to happen is once these spot ones go live, these will probably start to lose a lot of volume. Look at the volume on it right now. I mean, it's actually not too bad. It's actually pretty good. 5 million, 3 million. I mean, there's definitely volume here. But mark my words, when that spot Bitcoin ETF comes to fruition, this is going to start to lose its volume. Now, there is something very interesting on here. As you guys know, Bitcoin does not pay any dividend, right? Well, it tells you right away there's something wonky going on with this Bitcoin ETF because they're paying dividends. Or they're paying, half a penny. Well, that's nice. 7 cents there, half a penny the one before, but they're paying 38 cents this one, so very inconsistent. 66 cents, 42 cents. They're paying a dividend, my guess is because they're holding treasuries to balance out the volatility of this Bitcoin ETF. So, Michael says, I don't understand if I should buy BITO or any company that makes Bitcoin. No company makes Bitcoin. They're not making Bitcoin. Nobody makes Bitcoin. What happens is the code of Bitcoin is the only thing that makes Bitcoin. The code itself is the code is what creates Bitcoin. Now there's actions that must be performed to earn that Bitcoin, and that's what Bitcoin miners do, like Riot Blockchain and Marathon. So you could be buying the miners. Personally, I would just go buy Bitcoin. Go buy a Coinbase account and buy a small amount of Bitcoin, whatever you're comfortable with, because then you actually hold a piece that's of limited supply. It's kind of like saying holding physical gold. Right? Physical gold, you know that you actually own some gold. The challenge here is with gold, we have absolutely no idea how much gold exists on this earth. They can speculate and come up with some hypothesis that says, there's only X amount of ounces left in the world. They don't know that. They absolutely do not know that. So they might hit the largest vein of gold ever discovered in the history of mankind, which is 10 times more than the existing supply, and the price of gold plummets. That's an extreme, but it's a possibility. With Bitcoin, you're dealing with something that there is only 21 million of. That's it. It's the code. Done. So I wouldn't go with a Bitcoin ETF yet. If you were afraid of going and actually holding Bitcoin, putting it on a ledger like this little device, and being responsible for the storage of your Bitcoin, then go with a spot ETF once it's released. But like I said, you'll have that by the end of the year. And when we do have the spot Bitcoin ETF released, I will do a show specifically on that. It's so jarring when the ads pop up. Sorry about that, Steve. When BlackRock uses the Bitcoin ETF, will it only have Bitcoin in it? Good question. I believe yes. Now, I don't know 100% because I have not read their prospectus, but what they will typically do is, or most likely do, they'll issue a Bitcoin ETF that is only Bitcoin. It's just physical Bitcoin. Would they put in bonds like I believe Beto is doing? Possibly, but we'll wait and see. What I don't think you're going to get is, Ethereum and Litecoin, others mixed in there. They'll probably start to have their own. So BlackRock, once they get approved for the Bitcoin, they'll look for the next one that's outside the SEC regulations, meaning it's a commodity like Bitcoin. When they said that things like Ripple are securities, you're probably not going to have a Ripple spot ETF. They're not going to do that yet, but they'll start making more and more that are targeted to specific cryptocurrency projects that don't get in trouble. The company like Mara, Mara, Marathon, and Riot are the two major players in that space in the United States that are, or actually in the world, that are Bitcoin miners. So if you look at, here's a picture of, I'll see if I can bring one up for you. Riot. They have farms that are the size of Costco warehouses. Pictures from Florida to ceiling are these high-cost mining rigs. I mean, there you go. There's Riot platforms right there. Look, this is not short. This picture you see over here, I mean, these are like 20-foot ceilings. And you can see there's 1, 2, 3, 4, 5, 6, 7. That's 7 times 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Looks like 16. So 7 times 16 is how many miners they have just in one row. 7 times 16. So they got 122 per stack there. And in this picture, I'm looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm looking at 12. Times that by 12. They have 1,344 miners just in this little blip right here. That doesn't include the next segment, the next segment, the next segment. So these guys have massive, massive farms of just mining equipment. And now you're seeing them expand to different areas. They're making Bitcoin. I say making. They're actually responsible for the blockchain security. They're responsible for validating transactions and making sure everything is legit. And for that service, if they solve this puzzle first, they get rewarded Bitcoin. Right now, it's 6.25 Bitcoin is what they earn every 10 minutes. Right, that's the reward for miners as of this moment. In April of next year, it's going to drop from 6.25 to 3.125. So it gets cut in half roughly every 4 years. Let's see. Talking about it says Beto ETF holds futures contracts for October and November, T-bills, and $378 million worth of other assets, which is why I want nothing to do with it. Right. It's supposed to be a Bitcoin ETF, yet it doesn't just have Bitcoin in it. It's got all kinds of other stuff. I'd stay away from that. What chip they are using? No, Big App, it's not NVIDIA. So they're using a thing called an ASIC miner. It's an ASIC, is the acronym. It stands for Application Specific Integrated Circuit. An ASIC miner, think about taking NVIDIA's big A100 chip, right? The A100 chip is the baddest, most unbelievable video processor you can get on the market. It's the AI guru. If you're running an AI protocol, you need A100s. That is designed to perform certain tasks. Now, there's flexibility in that A100 circuit board that NVIDIA makes. An ASIC miner has one task. It won't run Windows or Office, and it's not designed for any of that. It's designed just to what's called perform a hash, an HASH. A hash is perform a mathematical computation. It's just trying to solve this puzzle over and over and over and over and over, and it's doing it at lightning speed. And every one of these is trying to solve this Bitcoin puzzle, and whoever solves it first, I solved it, they get paid. That's how it works. So yeah, they're ASIC miners. They're very specific computer components that are designed only to solve this Bitcoin puzzle. And there's, other proof of work technologies like Litecoin, like Dash, like Monero also have miners involved that are solving just that puzzle. So yeah, it's much more simplified than using NVIDIA. It's a targeted platform that does one thing only, and that's it. And it's funny because when there were ASIC miners that were built for Ethereum, right? Because Ethereum was proof of work. Then all of a sudden, Ethereum went to proof of stake. So everybody who owned these ASIC miners that were designed for Ethereum were left with giant paperweights. I'm not sure if it's an ASIC chip. I know that the device is called an application-specific integrated circuit, but I don't know if they're getting their chips from NVIDIA. Good question. I can look that one up sometime. Why are companies like Riot called a miner since it's not a true miner. It's just the term in the industry. So miners are considered the ones that are actually running computers, trying to solve this computational puzzle, and whoever solves it first wins. That's just the term that was given to them. It is kind of a weird one. Let's see. Greg says, my gut tells me when big players like BlackRock take an interest in Bitcoin, for example, is they might support a big price dump so they can gather Bitcoin at a low price. Just a thought. Yeah, sure. And I wrote an article on this one for Bar Chart a while back, which did not come to fruition. And in that article, I was basically outlining why I think, sorry, I'm actually trying to find the article right now, so I'm doing multitasking here, why I think that once the Bitcoin spot ETF is approved, that you're going to see a massive shift to the upside, because BlackRock and any company that gets approved for the spot Bitcoin ETF now has to amass a very large holding. So I wrote in June, I said why BlackRock can push Bitcoin to $45,000 by August. That was the article. I still think that there's a lot of arguments in my article that are very valid. And for those who might be new, I will post it in the chat so you can read that one as well. Again, this is an old one, but they're going to have to get it somewhere, right? So my target for August was missed. I was wrong. I still believe I'm right by the end of the year, and I think that when that Bitcoin spot ETF is approved, you're going to see this thing spike to the upside. And wow, you guys keep asking me questions. I typically do not like to do hour shows, and I'm already at 57 minutes. So holding could limit price manipulation for a dump. Correct, right, Tom? Because I've got all my Bitcoin. It's no longer part of the supply. It's sitting on the blockchain. I'm not selling it. They can't access it. They can't buy, touch it. So anybody who's hodling and removed them from the exchanges, you're actually helping out. That's why I encourage everybody, take your Bitcoin off of Coinbase or Binance or any of these places. Keep it on your own drive. All right, before we get to 1 hour, thank you guys for the show, or for joining me today on the show. Hope you enjoyed it. Tomorrow, I'm going to have Justin Krebs on the program. Completely different topic. We're going to talk about end-of-year taxation planning. So we'll give you some thoughts that he sees might be important for you as a trader or just holding whatever assets to think about going into the end of the year. We thought we'd do a little bit sooner than we usually do it in late November, and I thought let's do it earlier just so we can kind of get people's thoughts spinning for that end of year tax planning. So Justin Krebs will be our guest for tomorrow. If you guys have questions, send them on in at TraderMerlin@gmail.com or put them down below any of the videos on my YouTube channel. I put all those questions inside the show and we roll from there. So that's it. 58 minutes. Thank you guys so much for the questions. And all you new guys, hit that subscribe button, hit the like, share, spread the word if you like, and I will see you guys on tomorrow's show. Take care.